Bring in a couple of experts. Dan Primack is Axios business editor, and Duncan Davidson is a partner at Bullpen Capital. Welcome to you both. And Dan, there are people saying, I mean, geez, this was supposed to be kind of a mutually beneficial ecosystem here, and instead it was VCs turning on a bank. Some reports that they were getting their money out before telling their startups to get their own money out, and it's a really bad look all around, a lot of bad blood, and a lot of people furious with SVB over what they perceive to be terrible mismanagement here and pressuring them into bank relationships that now, in retrospect, left them fully exposed to its demise. What are you hearing?
Yeah. I mean, right. There's a lot of venture capitalists who told their portfolio companies to get their money out, and there's a lot of criticism of them from those who are supportive of SVB. One thing I'd say about that, though, is there's a sense of pragmatism here, right? If you're and so I'm a little sympathetic to the venture firms who on Thursday started telling their portfolio companies you might want to get your money out. Ultimately, a venture capital's responsibility is to its companies, not to a bank. And now, granted, this bank has done a lot of good for Silicon Valley, and I think there are big questions about what its demise is going to mean for the future of startup formation. But if you've got payrolls next week, you're a portfolio company or you're a company with payrolls next week, the pragmatic thing was to at least diversify and make sure you were going to have cash. Remember, everyone who was freaked out on Saturday, those were the companies that didn't pull their money out. They were freaked out because they didn't pull it out. They could have had real problems. So there is an enormous amount of animosity and bad blood right now, but I'm kind of sympathetic to both points of view.
Duncan, have you ever seen anything like this before?
Well, I've seen other bank runs. I just say that all bank runs are unhappy in their own way. This one was so avoidable. I mean, my God, what a dumb thing to say in a CEO conversation. Don't panic. That's why everybody panics. Dan is exactly right. We had to tell all our companies, even though we knew it would lead to the contagion, that they got to protect themselves. Their money gets locked up. They can't make payroll. They go down. They go under. And it's a tragic situation. It's a prisoner's dilemma. And that's why the whole industry acted the way it acted.
Have you had to step up and put any of your personal capital here to help people make payroll, that sort of thing, Duncan?
We haven't been in that situation yet. We actually are fairly well protected in our portfolio, fingers crossed. But I think the bigger issue here is this. The speed with which they came into the market, the regulators, was actually too slow. We all remember It's a Wonderful Life. You got to go down to the bank, get your money out. You got time to stop a bank run. Right now, the regulators have no time, and they took even a few days was too slow for Silicon Valley. If they had asked ChatGPT, what do we do? They would have got a quicker answer than what they responded with. I do think the regulatory fallout here should be not to put more paper trail on the banks, but to tell the regulators, find a way to act more quickly. The internet, wiring, everything goes too fast.
Right, but Duncan, they might turn to you and say you acted too quickly.
No, the problem was once everything cratered, what are you going to do? You have no way out of it. In other words, bank run is a human psychology problem. That isn't how you don't solve it by saying don't act like everybody else. You solve it by protecting the asset as quickly as you can.
When did you first get wind? Was it last week? Or, there have been a newsletter was writing about this in November. There was Jonathan Weil writing about it in the Wall Street Journal back then as well. When did you first get any inkling that this institution might have a problem?
This was not a surprise. I mean, the fact that the Fed is raising rates and you got too much in treasuries and you have to do something is not a surprise. The fact the real estate market, especially around San Francisco, is a bit depressed is not a surprise. But people thought the management of this bank, which we love, this bank is such a great institution, we thought they would be on top of the issue. What the surprise hit on Wednesday night, and I don't know why they announced they failed to raise money. You would think they wouldn't say anything until they raised money. Just a blunder, and the blunder just compounded the next day.
Go ahead, Dan.
Just to add to what Duncan said, I mean, my understanding from talking to some people who were involved in those conversations last week and the week before at SVB, leading into that Wednesday announcement, they didn't try to raise the money. They got $500 million from General Atlantic as this cornerstone. But it's from my understanding, it's not like they called 20 private equity firms and only General Atlantic picked up the phone. They felt, and obviously in hindsight, a terrible decision. Get the $500 million from General Atlantic, and the market will give us the other $1.5 billion. That cornerstone will give everyone confidence. I mean, they were fatally wrong about that.
Why do you think that is, Dan?
I do not know. I can't figure it out as a question. I keep asking and no one has an answer. And I'd say as the second part, and Duncan said this also, just from a messaging standpoint, it's also very clear. And I've never run a bank. I would like to think that banks know that the possibility of a bank run is always out there. It's remote, but it is the worst case scenario for you, that somewhere there's a break glass messaging plan. If there is a run on our bank, this is what we do. Follow steps 1, 2, and 3.
Right.
It does not appear SVB had that, or if it had that, it didn't institute it. And I'd say is the last piece of this, if it had it, didn't institute it because there was a quiet period because of the share sale, it should have said, you know what, screw you, quiet period. Let the SEC sue us or fine us in 3 years. We have a bank to save here. Instead, they were like, quiet period, we can't talk.